What's up guys, welcome back to another video. If you're new here, go hit the subscribe button down below, give it a little like and share this video with a friend if you find it insightful. I would truly appreciate that. In this video, I will go over a few ways you can spot and avoid low probability price action. You see, the thing that holds many traders back is their inability to spot conditions they just shouldn't be trading in. They trade a pattern for the sake of trading a pattern and don't factor in market conditions. We can all catch winners, but can you keep those profits and avoid taking unnecessary losses during low probability conditions? You absolutely need to know how to spot them if your goal is to be a consistent trader. In this video, I will show you how. So the first way is very simple. A lack of fair value gaps in your chart means price is likely in a consolidation. As someone who primarily trades fair value gaps, if we don't see them, well, there's pretty much nothing we can do, right? Live by the fair value gap, die by the fair value gap. If they're not present, that means the market is telling us to sit out. Now, why is that? Well, fair value gaps show that price has intention to move. That displacement visually shows that price is aiming to get somewhere and get there fast. So when there's no fair value gaps on the chart, it shows a lack of intention to move anywhere, and we cannot work with that with our model. So now let's dive into the charts and look at some live examples. So here we are on the gold futures daily chart. We have monthly context we are playing with right here. Internal range liquidity to external range liquidity. All I'd be looking for is a sting into this monthly fair value gap, followed by a daily fair value gap displacing out. And then we can use that as context to look for trades within that and the commencement of this market maker buy model up towards those highs. So let's see how this played out. There's that sting into the fair value gap, the monthly. And now all I'm looking for is a daily fair value gap displacing up. Remember, fair value gaps show intention. If we're lacking fair value gaps, that means there is no intention. As we move along forward in price right here, what you'll notice is that price fails to create any sort of daily fair value gaps. Right here, this looked very promising. So what we needed to see on this next daily candle was not trade down into this level. So on this Friday right here, what I was watching for price to do, if I wanted to look for longs, is not trade down into this candle's high. But let's see what happened that Friday. We come down all the way and hit that candle's high, completely negating that daily fair value gap, giving me already the sense of a consolidation is likely in the works right here. So let's keep on moving forward in price. Let's see if we get any sort of fair value gaps to either direction, which as we move along, we see that that does not occur. So right here, we have another potential daily fair value gap being formed. Let's see if this candle is the one that creates that new expansion phase, creating the gap. So here we are, we get that gap displacing out of this consolidation area, which is exactly what we want to see. We want to see a fair value gap displacing away from the consolidation area and closing above that swing high. So now this right here is that fair value gap we can use to play and expect higher prices. Right here, what I did is went into the 1 hour, looked for my entry pattern there, and if you wanted to take a straight up setup from the daily right here, you can target 2R, entry in this gap, and it would look something like that. Right, and then that is your 2R on gold. But do you see how we could have avoided all of this low probability price action right here? By observing the failure of fair value gap creations. Right here, once this candle displays back lower, well, we're not interested in this anymore for longs until we see a fair value gap to the upside. Right here, we could have had a fair value gap right there, but this third candle came down and negated that. Right here, you could have potentially had another fair value gap higher, but this third candle came down and negated that, completely removing any sort of bullish fair value gaps from being formed and ultimately showing us what is likely ahead. Consolidation. So what we're doing is simply avoiding all this price action. Once we see the lack of fair value gaps being created, we're waiting for the fair value gaps to displace above the consolidation range, closing above it, closing above the consolidation range highs, and then playing that fair value gap that displaces it out, and then towards our drawn liquidity right here. And this is how the rest of that move played out. There was that monthly external range high tagged right there. Monthly internal to external range complete. So the next way we can spot low probability conditions is when both bullish and bearish fair value gaps are showing no follow through. What I mean by that is, let's say we're looking at a bullish fair value gap and expecting higher prices from it. Price ends up failing that bullish fair value gap to push higher and then creates a bearish fair value gap we can expect lower prices from now. Price then also fails that bearish fair value gap, showing a lack of respect to both premium and discount arrays. So what do we do in this case? In a scenario like this, we wait for a fair value gap to successfully follow through, create a new fair value gap, and then play that newly created fair value gap. So let's dive into the charts and take a look at an example. So here we are on AUDUSD. We have just swept a monthly swing low and we have this daily fair value gap displacing to the upside right here. Let's see if this follows through and move along in price. So we don't follow through and we create a bearish fair value gap, which we could expect lower prices from. Let's see if we follow through lower off of that. So we don't follow through lower off of that and start closing above it and consolidating in this gap. Now let's see if we form any other fair value gaps right here, because at this point where we have a bullish fair value gap being disrespected, we have a bearish fair value gap being disrespected, and all around here we also have, what did we just go over in that last point, how we started the video? A lack of fair value gaps, right? Lack of fair value gap signals consolidation. This right here is all very avoidable price action. So we see another fair value gap created right here. Can we trust this to go higher? Can we trust this for, let's say, internal to external? No, you can't just play the pattern. You have to understand, what have the market conditions been? Clearly, no discount arrays are holding, no premium arrays are holding. We're starting to consolidate right here. This isn't something I will trust. So let's see how this plays out. Of course, we fail it. Now, what do we see? We see bearish fair value gaps to the downside. Are we going to trust that? No. Why? Because of the current market profile we're in. We're still consolidating. No premium arrays or discount arrays are being respected. So this right here, even this fair value gap to the downside, isn't something that we would look at for a higher probability internal to external. This is something I would just not trade and avoid based on what the market has been doing right here. So let's move along in price and see what happens next. So as you can see, we close above it, disrespecting all these weekly fair value gaps, and then we just see another displacement down. Let's see, do we create a gap here? Yes, we do. Are we going to take that? Is this high probability internal to external range liquidity right here targeting this swing low? Absolutely not, just like we've discussed before right here. So let's move along. Does this work? Of course it doesn't. As you see, we start chopping and not really respecting this weekly fair value gap at all. So this is all very, very avoidable price action right here. Let's keep moving forward and see if we ever get a fair value gap that creates a new fair value gap. So here we have a large displacement above all this consolidation. What we want to see is, does this fair value gap right here displace higher, creating new fair value gaps to the upside? So let's observe if we get that. So we do not get that, and in fact we start getting bearish daily fair value gaps to the downside again, meaning we are back inside of this general consolidation range. We still want to avoid this pair entirely. So again, what we're still waiting for is, say we get a fair value gap here that creates a new fair value gap. We would play this second fair value gap right here. All right, so let's watch for that and see when that happens. All right, so here we are, fair value gap displacing higher. Do we take this one? No. We set this one out and we wait for it to create a new fair value gap higher. So this right here, while it is internal to external, it is not high probability yet. We can't trust this fair value gap because none of these fair value gaps have shown that they can be trusted. So we have to demand that confirmation. We have to let the market gain our trust back by creating a new fair value gap off of previous ones. So let's see what happens off of this. So there you go. You have your first fair value gap created out of a previous fair value gap overlapping as well with an old swing high. So we have a fair value gap right here with an overlapping array. Two PD arrays are very strong. And now let's see if this moves higher, right? Because this is now a high probability internal to external range liquidity move right here. This is high probability context. So this right here is what you can trade. Dive into your lower time frames, look for your 1 hour fair value gap displacing away. If you want to be an intraday trader, look for that 5-minute fair value gap displacing away from that 1 hour fair value gap, and you'll find your market maker buy model within this boundary right here for price. So let's see how this delivered. And that was just gorgeous right here. Note the respect to this overlapping array. No body close below it. Nice lower rejection wick and beautiful expansion higher. This is how we can get to a high probability context and avoid all this low probability context. This is why you can't just trade the pattern internal to external for the sake of it being present on your chart. It takes a little more critical thinking. So now we have confirmed bullish order flow. So we have more high probability context right here, daily internal to external from this daily fair value gap to this daily swing high. We can now expect a move higher and go into our lower time frames and look for our market maker buy models in there. So let's see how that played out. And there is that context complete. Beautiful. Another way we can spot low probability conditions is by looking at trapped order flow. So what exactly is that? Well, trapped order flow is when price is stuck between a higher time frame premium array and a higher time frame discount array. Essentially, there is no clear one-sided direction anymore. Price has a reason to both be bearish and be bullish. Essentially, price is trapped. So in a scenario like this, all we're doing is waiting for displacement off of either the premium or discount array and watching for that opposing PD array to now be disrespected, no longer posing as an area of resistance for price to potentially respect. So put simply, we're looking for price to escape the cage it's currently trapped inside and then play in that direction. So here we are on US dollar monthly chart. We have monthly context right here, potentially setting up monthly internal to external liquidity. Now we would go down to the daily and let's observe how we traded into that. So we see we have a daily fair value gap right here, displacing price into that monthly gap. So this right here is that first line of resistance before we can start seeing nice lower price action off of that. So right here is where you're going to encounter trapped order flow. When in this daily fair value gap and this monthly fair value gap, we have both a reason to potentially move lower or move higher off of this daily gap. We don't want to interact with this market until it either presents us with this daily fair value gap being disrespected, violated, no longer posing any resistance, or we completely displace above this monthly gap, disrespect it entirely, and then we can begin playing higher prices right here. So as you'll see, as we move along in price, you're going to notice a lack of intention to push anywhere right here while we are trapped between that monthly and daily array. So right here, we see displacement above, respecting this daily fair value gap. But the very important thing to note here is that this monthly fair value gap still technically has not been disrespected. If we want to start looking for longs and consider this monthly fair value gap disrespected, we want to see daily fair value gaps displace above that and closing above this monthly fair value gap so we can then use to push higher. But this right here, we can consider that a sweep within a monthly PD array to potentially still continue lower. So again, nothing I want to do right here yet, as this monthly fair value gap has not entirely been disrespected. We're just trading up to the 50% of it, also known as consequent encroachment of this gap. So let's see the reaction off of this. Eventually now moving lower and working lower off of this monthly gap. Remember what we discussed in the beginning of the video: lack of fair value gaps signal low probability price action we don't want to interact with. So as you see right here, there are 0 daily fair value gaps displacing lower off of this. So already not looking like something I want to interact with, looking like a low probability market for our system. Let's continue moving along. And as you'll see, there is no fair value gaps all throughout here. This could all been very easily avoided. And now we are seeing daily fair value gaps finally displacing to the downside right here. So this right here would be a level I would expect lower prices off of. Now again, if we don't push lower off of that, we never see the lower time frame signatures, for example, 1 hour for value gaps lower, it wouldn't be something I would look for shorts on. So let's just go into the 1 hour, see if we ever get that signal to go short on this off of that daily fair value gap. And as you can see, I just got executed live on an order there. But let's see if we ever get that 1 hour fair value gap lower off of this level, which we do see one right here. That would have been an entry. And that would have been your 2R right there. So this 1 hour fair value gap right here, you put your stop loss at the swing high, and then you can target 2R right around here. And you would have been able to get 2R off of this daily idea to the downside. Now what we'll see here, because I already know how this played out, what we'll see here is a huge retracement to the upside, or a huge displacement, I should say, to the upside, right? Which again, this goes back to previous topics I've touched on in old videos, why I like to target just a simple 2R, because 2R within this context right here, it's very likely to get hit if you get your lower time frame confirmation off of that daily. But the external range liquidity, that final target right here, it's not always guaranteed, right? And I love aiming for low-hanging fruits, getting my small piece of the pie and being content with enough. So that is why I always target 2R. This external range liquidity is never guaranteed, but a 2R, nice little small 2R move within this is very high probability to tag you out and give you a nice green trade. Lastly, we can avoid low probability conditions by making sure we never pair a strong currency with a strong currency or a weak currency with a weak currency. And I'm specifically regarding the currency futures. And if you don't know how to utilize them, you can check out my previous video right here, linking it at the top right. It is an absolute game changer. You should not skip out on this piece of knowledge. It will drastically improve your win rate. But you need to understand that low probability conditions will be encountered when pairing strong and strong or weak and weak. So let's look at some examples. So right here, I'll show an example of what I'm talking about when we pair weak and weak currencies. All right, so we always want to pair a strong and weak currency because that is what's going to see the highest probability price action moves. Over here, we have CAD futures in the top left and JPY futures in the bottom left. As you will see, they're both weak pairs, right? If we go to the weekly charts right here, you'll notice that CAD, let me zoom into this right here. You'll see that CAD has a weekly reason to go lower, right? This order flow leg right here is pointing lower. This fair value gap with an order block right above it, it is pointing towards sell side liquidity right here. So CAD has been weak and has a sell side draw. We look at JPY, we'll notice that it has also been weak and has a sell side draw. We have weekly internal to external playing out right here. So we can come to the conclusion that JPY is a weak pair and CAD is a weak pair. So what we don't want to do is pair CAD and JPY because we'll get low probability conditions. So back onto these four charts, you'll see that I have included GBP JPY down here. Now the reason for that is at this time, GBP was the strongest currency future. If you want to take a look what that looked like, you can check out my most recent video before this and you'll see me analyze this exact setup on that. We had GBP JPY with a weekly context to the upside and it has clean context to the upside because it has a strong and weak currency paired. If we look at CAD JPY, we don't have any sort of context here. And we know that because we're pairing a weak and weak currency and it's not going to see clean movements, clean price action, just conditions we want to overall avoid. Going down into the daily, you will see this even further with this consolidation price action right here that we just overall avoid. You see how much weaker this trend to the upside is. We want to avoid that and just focus on the highest probability conditions, which would come from pairing a strong and weak currency, which at the time was GBP with the strength and JPY with the weakness. And we focus on that, right? I hope you can see the difference right here between how high probability this right here is and how low probability trading any of this is. It's just a weaker trend. It is the lower probability XXX JPY pair. We want to focus on the strongest base currency right here and trade that. So let's see how this played out. And right there, you had your context complete, while CAD JPY was still all the way down here. So last few things I want to throw in here for you to know. on what to avoid. Days of big three news events, so CPI, FOMC, NFP, you want to avoid trading during or before the actual news event and wait until after the news release itself to then comfortably engage with price action. The reason being, these big three news events see extraordinary volatility, and any stop loss you may have in the market is bound to get absolutely slipped to hell, and you will suffer a loss much greater than anticipated. So just don't do it. Don't be stupid. Don't trade during these big three news events. Avoid it at all costs and wait until after the news release. Trading the big three news events is gambling. We are not gamblers. So be smart. Don't do it. Second, you want to avoid trading USD bank holidays and half days. The reason being is that these days tend to lack any sort of meaningful volatility, and it's just overall lackluster price action we want to avoid. So primarily, if we have USD bank holiday and USD half day, you want to avoid trading any USD pairs, the majors, and indices. Last thing I want to mention is days which lack red folder news. So you've heard me say this before. Economic calendar is our roadmap. You will often see me avoid days which lack red folder news. Now, specifically, this applies more towards Forex, which relies way more heavily on news for volatile price action, whereas indices has that built-in volatility injection every single day at the 9:30 open. So I will often trade indices without red folder news on the day, and you will see them move quite nicely. Whereas Forex, if you have a day which is lacking red folder news, I do not intraday trade that. I avoid it as I see that as low probability because there is no volatility injector for that day. So I wait for days which have red folder news. So that concludes this video, and I hope you guys found that insightful. Hopefully you now know how to spot these low probability conditions and filter out all of those low probability trades you may have been taking, as a result increasing your win rate from here on out. Remember, when we're trading internal to external, it's not just see the pattern, trade the pattern. It takes some more critical thinking. It's not as simple as you may think, right? You have to actually put your brain into it, analyze what has the market conditions shown us. Can we trust this fair value gap? Is there any opposing areas of resistance? Are we in trapped order flow? All of that you have to take into account when considering trading a internal to external range move. So if you found this insightful, I would really appreciate if you guys subscribed, like the video, and leave a comment down below, and share with a friend who you think might benefit from this. Also, if you're looking to start a prop firm challenge, you can use code PICKLE for all the most up-to-date discounts on all the prop firms listed down in the description below. You can go check those out. It's a win for you, it's a win for me, and it just overall helps supports the channel, and I would just really appreciate that. It's very silly to pay full price, so why not just use the code? And lastly, as you see on the screen, I have a free Discord where I do weekly outlooks, call price every single day, post charts, answer all your questions, and overall just interact with a very like-minded community who is very helpful. So if you're looking for that, you're looking for people to trade with, looking for overall a community you can be part of and just talk straight up trading, join the free Discord below. We will get you on track and in the right direction. You don't want to miss out on the immense value being offered in this free server. So I'll be waiting for you guys there. And as always, thank you so much for watching. I will see you in the next one. Peace.